Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KUAISHOU-W latest report. KUAISHOU Technology offers a diverse range of businesses and services, including live streaming online marketing, short video and content-based social networking platforms, KUAISHOU Flagship, video sharing websites, AC Fun, entertainment services, e-commerce services, online games, online knowledge sharing services, software development, hardware development network, technology development investment activities, programming services, advertising services, internet information services, technology development, and promotion. The significant increase in KUAISHOU-W KUAISHOU 1024 HK stock price over the past year can be attributed to several key factors. The launch of KUAISHOU, a unified multimodal creation tool, has been a major contributor, with Goldman Sachs projecting substantial revenue growth for the company's AI business. Additionally, enhancements to KUAISHOU-AI's features have further boosted investor confidence in the company's ability to drive innovation and efficiency. The global surge in interest in AI has also had a positive impact on KUAISHOU-W KUAISHOU stock price, with Goldman Sachs recommending an overweight position in Chinese technology stocks. The company's strong financial growth in Q3 2025, including a 14.2% increase in quarterly revenues and a 69.9% rise in operating profit, has further solidified investor confidence. Overall, KUAISHOU-W KUAISHOU's strategic focus on AI innovation and its ability to drive strong financial results have been the primary drivers of its stock price appreciation over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown primarily due to the increase in domestic revenues, online marketing services, and other services such as e-commerce. The average online marketing services revenue per DAU increased by 24.7%, while total e-commerce GMV grew by 14.9%. Additionally, closed-loop e-commerce marketing services, pan-shelf search scenario with large models, and lifestyle service sector have contributed to the growth. Revenue decline drivers. On the other hand, overseas revenues declined by 13.1% year-over-year, and live streaming revenue decreased by 5% from RMB 10 billion to RMB 9.6 billion. These declines highlight areas where the company needs to focus on improving its performance. Net income experienced a significant increase of 26.3% year-over-year, indicating a substantial growth in revenue or cost reduction. However, there was no change in net income between Q3 2024 and Q3 2025, suggesting that the growth may have been a one-time event. Profit margins showed mixed results. The adjusted net margin remained stable at 14%, while the gross profit margin increased slightly from 54.3% to 54.7%. Conversely, the operating margin decreased by 0.2% from 15.1% to 14.9%. These changes suggest that the company's ability to generate profits from its core operations has improved, but its overall operational efficiency may have declined. The company's financial performance indicates a strong ability to generate positive operating cash flow. The net cash generated from operating activities for the 9 months ended September 30, 2025, as reported on pages 22 and 27 of the financial summary, is consistently RMB 19,450 million. This consistent figure demonstrates the company's efficiency in managing its operations and generating sufficient cash to support its business activities. The company's debt level and interest expenses have undergone significant changes. On one hand, non-current liabilities decreased by 37% and 27% respectively in the initial period, indicating a reduction in borrowings and financial liabilities. However, this trend is contradicted by an increase in total debt from RMB 11.1 billion to RMB 13.09 billion. In terms of interest expenses, there was a notable decrease in finance expense/income, net from 217 in 2024 to 118 in 2025. Additionally, the company generated more cash from financing activities, increasing from 2,005 RMB millions in 2024 to 4951 RMB millions in 2025. These changes suggest that while debt levels have increased, interest expenses have actually decreased, indicating a potential shift towards more favorable financial arrangements. Management's outlook and strategy overview. The company is advancing its AI strategy to achieve strong operational and financial results. It is expanding scenario-based AI applications across the business, accelerating followers' growth through new features, and strengthening its KOL supply ecosystem. Management is cautiously optimistic about the outlook, citing improved operating profit margin and adjusted EBITDA. Key areas of focus include investing in AI research and development, improving selling and marketing efficiency to reduce expenses as a percentage of total revenues, expanding high-quality product offerings, and maximizing synergies between short videos and live streaming, investing heavily in property, equipment, and intangible assets. The domestic segment saw significant revenue growth, while the overseas segment's operating loss decreased. Overall, management is optimistic about the company's prospects, driven by its strategic investments and operational improvements. The company's financial summary reveals a clear indication of its commitment to shareholder value. Notably, the company has a history of paying dividends, as explicitly stated on page 34. This demonstrates a consistent effort to return profits to shareholders in the form of dividend payments. In contrast, there is no mention or evidence of share buybacks, suggesting that the company's primary focus lies in rewarding existing investors rather than repurchasing its own shares. Concerns about inventory buildup and supply chain disruption are warranted. The recent financial summary highlights two key concerns that warrant attention: inventory buildup and supply chain disruption. The average daily number of active merchandise items has increased by over 30% year-over-year, indicating a significant surge in inventory levels. Furthermore, pan-shelf-based e-commerce general merchandise value, GMV, has outpaced overall GMV growth, accounting for over 32% of total e-commerce sales. These statistics suggest that the company's supply chain is struggling to keep pace with demand, leading to potential disruptions and inefficiencies. The buildup of inventory can also lead to wasted resources, storage costs, and decreased profitability. As a result, it is essential for the company to reassess its inventory management strategies and supply chain operations to mitigate these risks and ensure smooth business operations. That concludes the financial summary for KUAISHOU-W KUAISHOU-WR. Feel free to comment below, and I will be happy to answer them when possible.